Welcome everyone. Welcome to another episode of Wealth Talk by Vivekam. So as we covered in last week and the few weeks before that, we will cover topics on economy, stock specific questions and portfolio specific questions. In that continuation, because new companies are issuing their results, many investors want to know whether they should continue with their stocks or probably move away from their holding stocks to something else. In that kind of context being set, Prasad Garu, why don't we get into the topics? Before that, maybe do you want to add any comments on that?
People should always be aware that how is the results trend panning out. For example, when the companies start announcing results after the quarter ends on 30th September, they normally take about a week's time before they start announcing, and it goes on till about a month and a half to 2 months after the end of the quarter. As of now, if I look at the whole number of companies that have announced the results, irrespective of the market capitalization, we have seen there are 34 companies that have announced results as of Friday evening, that is on 14th of October. So out of these 34 companies, one healthy sign is 19 companies have results declared that are positive. That means the profits are expanding or losses are reducing. And 15 companies have reported either losses are expanding or profits are shrinking. So it is looks like even it's not like too much in favor of the profit growing companies. But unfortunately or fortunately, we always tell clients that to avoid looking at the companies which have got less than 1,000 crores of market capitalization, because they always are to be ignored because the impact cost is high. When I look at the kind of set up a filter of more than 1,000 crores, suddenly I realize there are only 20 companies that they have announced results which are trading above the 1,000 crores market cap, and out of them, close to 65% or 13 companies have announced positive results, expanding their profits by on an aggregate level of 4.22%. Some companies may have expanded the margins by 45%. Some companies may have enlarged even more. But altogether, if you look at the holistic view, 4% is the profit expansion. Whereas the 7 companies that have reported reducing margins or increasing losses, they reported worse numbers only to the extent of 1.28%. That means very marginal. So all in all, the trend at this point of time appears to reflect the buoyant tax collections, which actually made us to conclude that the profits of corporate India are going to be good in this quarter. We will have to wait for some more time, but at this point of time, the trend seems to be encouraging.
Right, Mr. Prasad. So with that being said, and with that context being laid about expanding profits, why don't we tackle Infosys first and foremost? One of the biggest IT giants in our country that has come out with results. And we must say results are definitely trending positive, with also a buyback being announced for investors. So why don't we cover a couple of questions into what this buyback specifically means for the investor himself, and overall view on the stock? Is it still positive? Because the results do show growth in, across the board.
See, buyback can be into two forms. One is they can say that this is the floor price at which we buy, and then they can offer it to all the investors to offer their shares, or kind of submit their bids, and then just wait for a lottery scheme where some shares get picked up from your holdings. That is one form of buyback. The other buyback is they say we are trying to buy the shares up to 1,850 rupees and from open market. What has been done by Infosys now is they announced that they're going to do it from the open market up to 1,850 rupees. So is it going to be beneficial to the investors? It is not likely to be beneficial to the investor to take advantage of this buyback offer by buying in the market at 1,500 and then offer it to the company at 1,850. That will not work that way. So the company is not allowing investors to get undue benefit from this kind of buyback offer. So investors should be very aware that if they want to buy, only if they want to hold on to the share, they should be there, because a company may not buy from you. That is number one reason. But at the same time, there should be a lot of comfort in the minds of Infosys investors, because they are sitting on a huge amount of cash reserves in the balance sheet, and they are going to use it to buy the shares back, which means if the EPS was some X rupees before, when the shares are bought back, all of them get extinguished. That means the number of shares in the company will come down. That means even if the profit remains at the same level, your per share profit will go up. That is going to augur well very for the long term. So investors are going to be definitely benefited, but not directly. Indirectly, they will stand to gain. Now coming to the kind of reflection of some kind of how the results have really been played out, and are the results really very encouraging or not? Now, coming to the question of looking at the actual hard results that are published by the Infosys for the latest quarter, 2022 September. If you look at this, the margin seems to have shrunk from 17.4% to 16.95%. You must understand the backdrop. Infosys is a very large company with presence in different countries at the same time. So obviously, the company on a large base cannot continue to expand in kind of geometric proportions. It is not possible. It has to be incrementally small margins, or against the headwinds in the whole world now, where the recession fears are looming very large. Even if the margins are maintained, it is excellent. Even if the margins are not maintained, small correction in the margins can always be seen as a positive, so long as the overall profit numbers don't disappoint. Now, Infosys, with this kind of buybacks, if you look at the numbers of PAT, it used to be 18,600 crores in 2020 December. That has been rising steadily, and now it has become almost 23,000 crores. That means almost like 4,200 crores is the profit addition. And in this time, Infosys has bought back shares from the client, and now again they are going to buy back. That means per share profit is going to be up. If you look at the margin, when the times were good, when the whole world is doing extremely well, the margins were 19.44%, but they have come down steadily. It is now trading at 16.95% is the net profit margin. Is that good? It is definitely good enough on a larger base, because on the whole, the profit available for distribution among the shareholders has surged from 18,000 to 23,000 crores. So just because the margins contracted a bit from a leading company, which is a kind of icon of India, so people should not be worried according to me. And according to us, the revised fair price is set at 1,818 rupees. So now, if you look at the PAT numbers, you can see the steady increase despite all the headwinds that are being talked about in the world and the press and the media. And apart from that, if you look at the kind of how much interest is being shown by mutual funds, we can see that mutual funds used to have 13% in 2021 March. They have increased their stake to 15% now. That means that though the profits margins have suffered a bit, absolute profits are going up, buyback is in the play, and the market has already touched the 1900 prices already in the past. That means our fair price of 1818 looks easily achievable if the market sentiment improves. So people, should they buy now or should they wait? According to me, the people who are holding the Infosys should continue to hold without any fear. But if the people are not holding Infosys, can they buy in? It's a good company, but it is only available at around 20% or 22% discount to the fair price. So instead of going for Infosys immediately, unless you are too conservative and then capital preservation is important to you, I would suggest you to wait for some more time, because when the companies announce results, there will be more number of companies declaring profits and available at least 30% or more than 30% discount to the fair price. So for new investments, it's not a good positive. It's not a yes right away. But at the same time, if you're holding the Infosys shares, you can continue to hold on without any fear.
Right, Mr. Prasad. So with that context being laid, I think investors can now understand what kind of parameters and factors that we take into consideration also when we come out with a fair price, but not just that. Also, when people ask us whether you should continue to hold a stock or probably get out, these are some of the things that we consider, and it is our attempt to kind of educate everyone and every investor to be able to kind of take these decisions themselves. With that being said, let us move on to the next stock. So because we have seen one stock with growing profits, let's see another one that is probably the opposite side. Shree Cement has definitely reported somewhat lackluster numbers, probably due to the rising input costs, due to the global crisis right now in crude across the world. But the numbers are out, and as an investor, what kind of mood or sentiment should we have is one thing. So that let's ask Mr. Prasad. Shree Cement, what are your views on the stock?
Cement industry per se is actually going to have a lean season in the rainy time, like in the monsoon season, because the construction cannot gather pace and then there will not be consumption demand. In addition to that, in the last 6 months to 1 year, energy prices across the globe have gone up. That included coal, which is a raw material. Limestone price also has gone up, and the transportation, which is a major contributor, major variable in the cost of cement, that also has gone up. So now with so many input costs going up, and whereas the top line is shrinking or kind of stagnating at a particular level, that means your cost catches up. Obviously, the margins will be reduced. We already spoke about it in the previous episodes where we predicted cement industry is not likely to have best of the times in this quarter and probably next quarter also. And proving us to be exactly right on the point. Now the Shree Cement has announced the results, and results will speak out for itself. If you look at the Shree Cement results now, the revised estimated fair price according to the latest workings set by us is 22,195, which is less than 1,000 rupees or 1,500 rupees more than the current market price. So does it offer scope for the investors to hold on? According to me, no. Because a company that has got only 5% scope to grow and deserves to be sold when it reaches 22,195, according to us, we should sell it, keep the cash ready, because when the companies announce results, more companies will come with positive results with a gap between fair price and market price. We can use this money to invest into those growth companies. And to justify our analysis, if people can really have a look at the kind of margins, this company used to have 17.76% margin in 2021 September. If you look at the margin, 17.76 is the profit margin. And the profits were 2,626 crores on that time for the trailing 12 months. It has come down from 17.76 to almost half, 9.75% now. And if you look at the profit also, it has come down to 1,600 crores. That means the total profit available for distribution among the shareholders or for reinvestment to the company for the full 12 months has come down to 600 crores. So there is no scope for us to consider this company worthy enough. So according to me, investors who are holding on to the share should immediately get out, and people who are not holding on to the share and contemplating to buy it should definitely take a serious look at the graph that I'm showing on the screen. The PAT is continuously falling, EBITDA is also falling. So that means you want to catch a falling knife. You are likely to be injured than kind of being successful in holding the knife for your use. In addition to that, if you look at the simply quarterly standalone numbers, the profit margin used to be 18.89 in 2021 March. Now it is a paltry 4.54. That means the profits have eroded by 75%. In addition to all these factors, if you look at the kind of how much is the mutual funds were, how are the mutual funds reacting to this? They used to hold 8.31% before. Now it has come down to 7.07%. That means mutual funds are also selling. And if you look at the kind of how much is the foreign institutional investors holding onto this company, you can say 12.51 is to be the holding. Now it has come down to 11.85. That means institutions are selling, mutual funds are selling, and then profits are falling, margins are shrinking. Please don't stay invested in this company in your own interest. You must get out of the share and then try to move the money to a better stock.
Right, Mr. Prasad. So, like previously, we have talked about how cement may go through a lull, especially when also interest rates are rising and also the rainy season. In contrast, during the same time when interest rates were rising, we have talked about how banks and NBFCs have the most to gain, and usually their business model is kind of lined up to make the most of the situation. With that context being laid, I want us to kind of discuss Federal Bank, which is the biggest bank, which has come out with the earnings with these results, and definitely positive is an understatement. But as an investor also, should he continue to hold? And if someone is not already invested into Federal Bank, is it now a worthwhile time to probably explore getting some exposure into it?
See, banks and NBFCs have been our hot favorites for the last few months because ever since interest rates started going up in India and then across the globe, we clearly perceived and then forecasted that the companies involved in money making or kind of money lending will stand to gain because any repo rate increase by RBI, banks will try to pass on the increased interest cost to the borrowers first, and then they will try to give the benefit to the depositors. So because there is going to be a gap between the raising the rate of lending and then raising the rate of deposits, the banks will have a higher net interest margins left. That is why we said banks and NBFCs will definitely do well in inflationary economies or recession-filled economies. So reflecting that kind of forecast that we made, the Federal Bank has come out with the results. But one thing everybody should be aware of is Federal Bank has been going up. It is not going to go up only from today. It is always on. It is already rising. So now Is it worthwhile to buy at this point of time, or is it worthwhile to hold on? These are the issues that we need to address. Before we address that, let us share the screen. Let us give them a perspective of why they should consider. First thing everybody wants to know is what is the revised fair price according to the latest workings. The revised fair price of the company is 168 rupees. So now compare it to the current market price, and if you see good scope, then you can buy. But if you don't see a good scope, if you're already holding on to Federal Bank, be very, very safe. Feel safe that you can hold on to this company and consider getting out of Federal Bank only if it goes to 168. And why are we so confident and then strong about Federal Bank is this margin used to be 10% in 2020 December, has been steadily going up, and then now it has reached a kind of proportion of 16.28% now. That means in the last 2 years, the margin has expanded by 5 times. And if you look at the profit figure also, from 1400 crores, it has become 2500 crores. Another important factor that we should remember is the price earnings ratio of private banks like HDFC, Axis, and ICICI Bank and Kotak, they are about 20. But whereas Federal Bank is trading below 15 or below 14 also. So you need to understand that there is a margin expansion is happening and profits are doing well. And there is no identified single promoter group for Federal Bank. It is normally held as very wide. And reflecting all these healthy trends in Federal Bank, apart from the PAT going up and EBITDA going up, top line going up, you will also be surprised and very happy to know and feel confident because mutual funds have increased their stake. They were already holding 29% in 2021 March. They continue to increase their stake in this company to 32.25% in 2022 June, and September statistics are still to be captured. That means mutual funds are doing extra investments and profits are going, margins are growing up. And now, should I hold on or not is mostly an issue that is already answered. Though it has gone up from almost like 85 rupees to 127, 128 rupees now, people say 50% jump has already happened. Can it still be hold on? Yes, it should be held on because it is the fair price is traded set at around 168. Now it is only trading at around 128 or 129. There is still potential left. But for new investment, as I said in Infosys case, you should consider holding on to your cash for some more time to your chest, because if more companies come out with results with a significant growth in their profit line, but there is a gap between fair and market price, we can use the money there. But who are already invested in Federal Bank, just stay invested is what I can recommend at this point of time.
Right, Mr. Prasad. Lastly, let us look at one more aggressive stock. So far, we have definitely taken a big giants in our market. So lastly, because Delta Corp has also given out their results, and surprisingly or unsurprisingly, definitely gamblers and casinos seem to be doing well because the numbers are trending very positively. And as an investor who is probably looking at it in terms of whether it is too volatile or probably is it not having enough scope to grow, what can we say about Delta Corp, the stock?
First of all, we are not here to do the moral policing on the investors because people want to make money. That is not a bad sign. And whatever businesses that are permitted by the government of India or state governments has to be respected in that context, and then say any business permitted by the government is legally doable business. So we do not want to get into the moral or ethical part of the casinos and the business per se. All that we try to contain or kind of restrict our exposure is the company doing well in its core business? Is the core business likely to maintain the sustain the momentum, and is it worthy for investors to consider? Because this company during the COVID time has got zero footfalls into the casinos because all of them were ordered to be closed. That means you have a salaries cost to pay, and you have interest costs if you have borrowed money, and if you have rental income, rental charges you have to pay, and apart from that, employee benefits and travel benefits, everything, all expenditure stayed there, but whereas your top line has completely shrunk. So this kind of, in this backdrop, now we have to look at the kind of numbers and then see whether it actually makes sense for us to consider investing this into this company now. According to me, because of the revised fair value being set at 341, it is definitely attractive for any investors to consider parking part of their money at least. There is no two opinions about it. If you look at the numbers, after the COVID in 2020, March, severe affecting the market, affecting the Delta Corporation, the business plan, it used to have about minus 14% net profit margin. That means there is a loss of 14% on every rupee sold or kind of income earned by them. Against that, if you look at the whole profit, it was minus 54 crores for that trailing 12 months ending in 2020 December. From there, if you look at where they are now in the latest year, that is 22 September ending 12 months, that means from 2021 October to 2022 September, their profit stood at a staggering 245, minus 54 crores to 245 crores positive. It is almost like 300 crores extra profit being generated in this period. And if you look at the margins also, minus 14% has dramatically moved to 25% margin now. So the profits are expanding, the sales line is increasing, and there is no fear of any revival of COVID again. So there is not likely to be any disruption in the business, and they don't need to invest any fresh money into this business because they already have the facilities and infrastructure, and there is going to be renewed vigor in the people to go and then involve in gaming and then kind of casinos. So people will definitely go there, and investments will definitely yield better results. And in addition to all of them, any time in the history, a loss making company converting into the profit making company is more viewed more favorably than a company that is already earning profit expanding a little more profit. The reason is people want to find a new emerging giant. If it is coming from losses to profits, people jump at it. So according to me, this company will definitely gain traction, at least should gain traction based on the strength in the operations. In addition to that, we are not alone. It has already seen the price of 340 sometime in the past, 330, 40 in March 2022. And post that, there was a correction. And now we are only saying that the fair price to be 340. And if you look at the mutual fund participation in this, they used to have 6.78% after the COVID in 2021 March. But now they are holding 13.48. That means they doubled their investment into the Delta Corp. Mutual funds don't sell it overnight just because of there is a price variation. So the selling is likely to be curtailed, and the operations are doing very good. Profits are expanding, margins are expanding. According to me, people should not even wait for one day. They should definitely park some of their money if they are not already invested. If you're already invested, enjoy the ride, just stay invested. But don't add any share because that may increase your exposure to this sector. So please understand, this is a worthy company to be invested now.
Right, Mr. Prasad. So I hope this session was useful to all the viewers and the investors. So definitely send over any questions about stock specific or portfolio specific questions that you may have to either the YouTube comment section or to us directly at holdings@vivekam.co.in. All we say is that rather than asking about one or two stocks, if you have a portfolio of stocks that you would like a consolidated report on, please make sure to send it along with the quantities either through the whole e-cash statement or the Excel file with the stock and the quantities so that we can process and send you a consolidated report on what to do with your stocks. So keep watching and thank you everyone, and let us meet next week.